Hi, this is the market outlook for the week starting July the 1st. A shorter week, and it looks like it's going to be an eventful one. The market has been, again, a bit range bound, so not too complicated to deal with for some time. A range from 28.77 to 29.75, so about 100 points for the last 3 weeks. And of course, the 29.70 have been a strong resistance for a long time, with, of course, 3,000 just being around the corner. And obviously, even though the bullish pressure has abated for a while, close to the much anticipated levels, still doesn't mean that a reversal is ready to come by. So if we look at, this is the 1 hour chart, let's go back to the daily chart. We have a potential retracement to resilience level on 29.10. Again, the range which we've seen for the last 2 to 3 weeks corresponds to the first significant support on 28.75, and we clearly see that bullish momentum. There's no, at least on the daily time frame, there's no real reversal to the mean. Actually, market has been evolving around the mean. I do not use longer term averages. I mean, they are too lagged. The MM50 or 200, and sometimes some other people use Fibonacci numbers like 21, 34, etc. I mean, it's a bit esoteric. There's definitely some information in Fibonacci, whatever you feel comfortable with. I mean, we're really evolving around the mean, probably like bouncing off the mean to try and go higher. And if we look at the short term, we do have more of an, an impact because of the narrow range. So this could mean that if the market strongly reacts upon the resistance area, we may have a bit more agitation. If we look actually at the futures market, it's definitely going up. So market is definitely aiming at 3,000, possibly as early as today. This is a shorter week, so there may be, of course, and this is the beginning of the new quarter, so portfolio calibration, preparing for summer, uh, low volumes. I mean, this is not something 100% circumstantial. Of course, we could say that what happened yesterday in Korea could be called a small step for man, a giant one for not mankind, but for the markets. So it probably played a bit of an impact here, but it's mostly just first quarter stuff. I mean, beginning of the third quarter kind of stuff. Right, VIX is falling, particularly in the short term. July is falling, which is probably good for the July expiration because we still have a trade on, actually pretty safe. And we have now 2 to 3 weeks to expiration. The intention is to close it probably. I mean, we've got some free theta coming this week, so probably sometime next week. So overall, bull run. I wouldn't call it a summer rally just yet. The market can still surprise us, of course. On the news side, there have been a mixed bag of plus and minuses. Um, I think anticipation of a rate cut is overstated, and we'll see now that there will be second quarter earnings coming in a few weeks. It could still be a rocky summer ahead. Before closing on this one, let's have a look at the Russell already bumping. It's been more bullish last week and bumping on this strong resistance area 1560, 1570. And even though there's some hesitation here, it could still, of course, go much higher. There's a lot more room on the upside than with the SPX because the all-time highs are actually around 1740, if I'm not mistaken. Of course, we have some support, potential support on 1520, 1510, 1500, which is a pretty strong one. But if we look now more on the upside, I would say that Market has been bumping in a resistance area of 1560 to 1566, 1570, and it could very much go back to the 1600s pretty soon. Right, that's it for this part one. The next video will be unlisted, so for subscribers only on our current trades. And I'll see you guys later on Slack. For those who are not yet on the Rhino and Slack group, I will provide an invite or look for Rhinos and Flies on Slack. Okay, see you a bit later. Cheers for now.